So my name is James Suh, and I'm a part of the business development team at DarcMatter. And today I will be providing a quick overview of problems that are pestering the alternatives landscape and how DarcMatter is providing additional transparency to the marketplace. So DarcMatter is a cloud-based platform transforming the capital raising process within the alternative securities industry. So why alternatives? The alternatives industry can be broadly defined as private offerings conducted by pooled funds and companies outside of public equities and bonds. So venture capital, private equity, and hedge funds fit in this bucket. Direct equity offerings conducted by private companies and fixed income products would fall within this category as well. As you can imagine, the alternatives market is substantial, with the number of exempt offerings exceeding IPOs, especially after the crisis. Investors are also increasingly looking towards alternatives as an attractive way to achieve portfolio diversification, especially due to their ability to enhance alpha generation potential, as well as mitigate against market volatility. In fact, 73% of financial advisors in the US and 67% of high net worth investors are seriously considering alternatives for portfolio inclusion. Despite this rising demand, the alternatives landscape is currently plagued by opacity, limited deal selection, and inefficiency. Due to the private nature of these offerings, alternatives are notoriously difficult to source, and institutional investors such as pension and endowment funds typically have preferential access to this asset class. And as such, independent advisors and family offices are unable to achieve deal pipeline and diversification. Most of these investors are limited to deals provided by large wirehouse firms and incur high costs as a result, high fees as a result. By natural extension, private issuers, quality private issuers who aren't associated with large firms, have a difficult time trying to tap into a fragmented and disparate investor population. These issuers are further hindered by geographical restrictions and market domination by larger, more prominent players. And the costs and time spent on financing are exacerbated by marketing, traveling, and intermediary expenses. These issuers essentially lack the technology and infrastructure to manage capital raises on their own. So the driving thesis behind DarcMatter is to enhance capital connectivity between investors and issuers. And also the platform itself is designed to streamline the capital process from start to finish. Issuers who are raising capital would essentially create a deal profile that includes information pertinent to a specific raise. And they would also upload offering documents to a secure data room. And in doing so, these issuers gain instant access to billions of investor capital at once. They can now manage the deal process as well as investors from a single dashboard. And the platform also provides predictive analytics for investor behavior and algorithm-generated investor recommendations for highly targeted outreach. For investors, we provide portfolio optimization tools through deal recommendations. And the platform ultimately enables fast deal sourcing and turnkey investing so that investors don't have to waste time sifting through irrelevant investment opportunities. Ultimately, DarcMatter is trying to cut the cost and time of financing for issuers and provide investors with institutional level access to alternative investment opportunities. So we charge a monthly subscription fee. We charge issuers a monthly subscription fee of $2,500 for the duration that a deal profile is live on the platform. To clarify, we're not a broker-dealer, so we're not in the business of selling securities on behalf of our clients. We don't curate the investment opportunities. We consider ourselves as more of a technology platform providing useful features for issuers, such as a dashboard for secure and compliant offering management, accredited investor verification services for those issuers who are relying on the new Rule 506C offerings or general solicitation, augmented liquidity from an ecosystem of investors who are seriously considering alts and looking for alts. And these are some of our premium features that are still in development. We haven't finalized them yet, but when they do come out, we would be charging these at a premium price point. We would be providing data-driven insights, like I mentioned earlier, to track investor appetite, as well as time raises. Third-party due diligence reports. We're partnered with a due diligence service provider, a startup company itself, comprised of former securities attorneys who do bad actor checks and make sure that all offerings are in good standing. We would also provide targeted investor recommendations for issuers to be able to reach out and directly message investors on the platform. And the platform would also provide a suite of investor relations and communications tools so that issuers who close their deals would still find value in the platform through the post-deal closing investors management. So our team is led by, and our company is led by an experienced team of professionals from diverse backgrounds ranging from finance, technology, to marketing. Our CEO, Sang Lee, is a former investment banker with BNP Paribas and West LB, where he led the advisory and execution of over $10 billion in private placement transactions. He is a product structuring and private placement expert, which proves to be invaluable for the kinds of services that we provide, as well as the type of clientele that we work with. Our CTO, Stan Slotky, has over 10 years of computer development and software management, and his skills range from financial institution integration with the SWIFT network to web development. And last but not least, our CMO, Natasha Bonskopal, is a former brand manager and brand insights lead for PepsiCo, a Fortune 50 company, where she was a creative and branding leader both online and offline. And her experience in social media marketing, brand creation, and partnership initiatives has really afforded us with the expertise to forge long-lasting key relationships within the industry. So the platform was launched in late November, so we are fairly early stage. We've only been around for a few months now. But right now we have over $10 billion roughly in aggregate deal pipeline volume. And currently on the platform, as of today, we have 26 deals up on the site. We've actually just today formalized a partnership with a family office organization comprised of about 60 family offices, which brought our investor AUM to over $200 billion. So this organization will be using DarcMatter as their deal sourcing platform of choice for illiquid alternative investment opportunities. Those are some of our recent press mentions and coverage. And in addition to the family office organization, we're also targeting existing industry leverage points to acquire clients on a mass scale. So cap intro event organizers that need a platform and see value in DarcMatter as a post-event, post-face-to-face interaction, due diligence and allocations management platform. We partner with these organizations as well. And we also target professional associations to the extent that they see DarcMatter as a platform that aids in their efforts, such as financial advisors. So yeah, the alternatives market is ripe for change and improvements to technology, and DarcMatter is basically providing transparency and seamless access, institutional level access to these types of investment opportunities. You can visit us at www.darkmatter.com. We're also on Twitter at DarcMatterHQ. Thank you.
All right, we have time for a few quick questions. Anyone? All right.
It'd be great to see an example of what a deal would look like. Do you have that?
Sure. Most of our issuers, they're actually 506B offerings. So they are private, and they would an investor would effectively need to self-certify that they're accredited. So I can't show you like an actual deal, but I can show you.
Did you have that up already?
It's covered by the homepage, but this is basically what it looks like currently. So the deal profile includes information pertinent to a specific raise. So this particular fund, they would include an elevator pitch, information on control individuals such as the management team, investment highlights, as well as the deal terms. This page itself, it's fairly high level. It's more marketing related. And sensitive information that's typically included in offering documents, those are stored to a separate data room. And investors would have to, depending on the privacy settings that the issuer has set, the investor would have to request access to specific documents in order to review them.
So that's great, and good job on this partnership. That's awesome. So what I'm trying to get out of this is, you're trying to replace a process, and you talk about okay, you're not going to pay as high as a fee as you would pay if you went directly to the issuer or the salesperson or whoever at the institution. If I'm a smaller office and I'm looking for a deal like this, I actually do appreciate the curation and the ability to have someone there talking me through it and showing me the deal. So I'm trying to understand, like, basically, how do you sell this to these, like, what was your selling point to that office to get, or that organization of offices to get them on board, and what is that going forward? How do you really sell this whole idea?
So back to your point on curation, I guess to rephrase that, we don't perform any evaluative investment analysis on any of the opportunities. So we don't say that a particular investment opportunity is good or bad. We just make sure that it is a compliant offering, it's an actual offering of securities, and that a certain minimum disclosure standard has been met. That's kind of our initial litmus test. In terms of actually finding opportunities, we're not just a listing platform. It's not just a database full of thousands of different investment opportunities. We do have filter search criteria that investors can use. So and in the registration process as well, we basically have a very short questionnaire that they can complete following registration after they're accustomed to the site, where they would tell us their investment preferences. And then that's when we would provide certain deal recommendations. But for an investor to look for investment opportunities at their own leisure, we do have a filter system in place where they can search by asset type, the AUM of the fund, geographical focus, industry focus, really mostly common sense stuff at the moment in terms of being able to find deals. Right now we only have 26, so it's not too difficult to I guess, find what you're looking for, but that's definitely something that we're adding in the future when we do ramp up and get more deal flow on the site.
With these small corporates or small issuers, a big problem tends to be ongoing documentation, getting it on a timely basis, and so on. So do you guys have, is it a one-time thing that they file documentation at the time of the inception of the trade and then that's it? Or is it an ongoing filing requirement? And second, is there a secondary market that you guys provide, or is it a buy-to-hold investment? Okay,
so to answer your second question, we don't provide secondary investments. Going back to your first question, in terms of documentation, since these are exempt offerings, for a particular raise, you would essentially upload whatever offering information that you have at the moment. We do have a checklist that we use internally to determine whether this is sufficient information, so that our investors are able to make well-informed investment decisions. But you are free to update whatever documents that you have at the moment. But we do have a very base level of documentation that we require. And in terms of post-deal closing management, in terms of reporting to investors after an allocation has been made, that hasn't been a feature that was implemented yet. Like I said, the communication suite, investor management, that will be added in the future, but there would effectively be a way for issuers to update existing investors, both investors that have invested through the site as well as investors who have invested offline, update them on a regular basis.
Hey, great presentation.
Thanks.
Quick question. So it sounds like self-accreditation is most likely online. That's pretty basic at this point. Some of the other players in the space, I know, like Sliced and Venovate, have gone like full allocation without any sort of hand-holding or signing any papers offline. Yeah. Are you guys nearing that? How much is online? How much is offline? What's the roadmap there?
Right. So at this moment, most of the subscription process is offline. So right now, we kind of, the platform's mainly used for facilitating capital introductions. Later, when we do become transactional, and investors can basically have, issuers can have investors electronically, digitally sign subscription documents, as well as send over wiring instructions, for instance. That we anticipate those features to be rolling out in the next few months. But right now it's more, in terms of our current status, it's more offline, basically how you would close a deal otherwise.
Thanks, thank you. Nice presentation.
Thank you.
So all the family offices that I'm accustomed to dealing with, they can be quite small, right? Yeah. This world is quite big and diverse. So it would seem to me, maybe you spoke about this, maybe I missed it, but if you can offer them this is a little bit of an advice, a little bit of question, offer them the due diligence box checked to a certain degree.
Yeah.
such that they can feel like they have some report or somebody that's a third party that is accredited or validated within the esoterics industry or whatever industry we're talking about that they can lean on, then they are down the road at least towards making an investment decision where they can get closer to internal committee or whatever. So what are you doing around that piece of it? I understand how you're screening on the front end for issuers, but what about, not saying you're an advisor, but we have provided third-party opinion here to those that are interested in investing.
Yeah, that's a great point. And the due diligence service provider that we have partnered up with, they provide these reports, which would and it's at option. It is a premium feature. So if an issuer chooses to have that on the platform, odds are an investor is more likely to take a second look. So that's kind of the way we have it on the platform. So we don't, like you said, we don't provide investment advice. We're not a broker dealer. We're not a registered investment advisor. That might change as our business model scales. But right now we don't do any particular hand-holding with the investors. We just formalized the partnership with that organization. So we are in the process of customer development in terms of seeing what kinds of deals, what kinds of asset types, what kinds of asset classes these family offices are really interested in. Are they interested in directly investing in private equity, or would they rather invest in a pooled investment vehicle? So a lot of the deal sourcing that we do on our end is, to a certain extent, informed by what our investors would like to see. But obviously, that is also a constantly changing demographic, since we are onboarding investors as well. But yeah, that's basically how we're going about it at this point.
All right, great. Thank you very much.
Thank you.